Whether we like it or not, venture capitalists are key contributors to the growth of the crypto market. The problem is, there doesn't seem to be much VC activity going on at the moment, and the crypto market is starting to feel like a bit of a VC ghost town. So, what the hell is going on?
What the hell is going on here?
Well, thankfully, a recent report has the answer. So, sit back and relax as we break this report down for you in simple terms and tell you where crypto could be headed next. My name is Guy. Let's dig in. Okay, before we begin, let's get something straight. This is not financial advice to contemplate. I'm here to share knowledge to help you explore, but your choices are yours and nothing more. Crypto's a journey where risks run high, so DYOR before you buy. Hit like and subscribe if these rhymes are vibing, and with that out of the way, let's explore what VCs have been buying. Right, the report we'll be summarizing for you today is titled, quote, Crypto and Blockchain Venture Capital Q4 2024, and it was published by Galaxy Digital. We'll leave a link in the description if you're interested in reading the whole thing. Now, the report begins by saying that in Q4 of last year, VCs invested $3.5 billion into crypto startups, almost 50% more than in Q3. This money was allocated across a total of 416 deals, which is 30% fewer than in Q3. What this suggests is that VCs have narrowed down their lists of top crypto picks and are investing much more aggressively into them. Anyway, this brings the total VC investment for 2024 to $11.5 billion, and the total number of deals throughout 2024 to 2,153. This is a slight increase from 2023, and the chart provided suggests that if 2024 is mirroring 2020, then 2025 is going to be a crazy year for VC investment. The report then looks at the correlation between VC investment and the price of BTC. The chart provided shows that BTC has pumped in previous cycles in line with VC capital. What's more is that VC capital tends to stick around after BTC hits its peak, and that's likely because VCs have rotated into altcoins, just like the rest of us. VC investment into crypto hit record levels in early 2022. However, it then fell off a cliff and has struggled to pick up since, despite BTC's impressive price action. The report reckons that this divergence between VC capital investment and BTC's price is down to a combination of weak allocator interest and Bitcoin-specific narratives that have left leading narratives from 2021 in the dust. Those being Web3, NFTs, DAO tokens, metaverse projects, and GameFi, for anyone wondering. Now, Galaxy doesn't really specify what it means by Web3, which is a tad confusing. Broadly speaking, Web3 incorporates everything crypto under one rather vague umbrella. So if we had to guess, we'd assume that Galaxy means specific websites that are meant to replace their Web2 counterparts, such as decentralized social media. But honestly, that's just a guess. Anyway, next, the report looks at which stages crypto saw the most VC investment at in Q4 of last year. As it happens, 60% of VC investments went to early-stage companies, while 40% of VC investment went to later-stage companies. This split makes perfect sense. Early-stage projects have the most upside potential after all. Some crypto-native VCs that would have raised a ton of money in the last cycle could also still have access to that dry powder, which makes you wonder where they plan to reallocate. Anyway, the report adds that, quote, VCs raised new money in 2024 and crypto-native funds may still have access to dry powder from large raises several years ago. And the report says that in Q4, the scales were beginning to tip in favor of later-stage projects. Notably, this is largely thanks to Tether's raise of $600 million from Cantor Fitzgerald. Recall that the total VC capital invested in Q4 was $3.5 billion, meaning that almost 1/5 of that comes from Cantor buying a 5% stake in Tether, an obviously well-established crypto business. You can learn more about why Cantor is so bullish on Tether and what this could mean for USDT and the rest of the crypto market by checking out the video right over here. Okay, now, the next part of the report looks at the valuations of VC-backed crypto companies. The report notes that VC-backed projects suffered throughout 2023, but then, well, who didn't? But VCs began investing again in Q2 of last year, as balance in the universe was restored and BTC broke its previous all-time high. Since then, the size of VC deals increased throughout 2024, although crypto itself has risen more sharply. The report adds that, quote, Q4 deals had a median pre-money valuation of $24 million and an average deal size of $4.5 million. Now, next up are the categories of crypto projects that got the most investments in Q4, and this is where things get really interesting. In a rather bizarre turn of events, it seems that the bundle of big winners from the last cycle came out on top. To refresh your memory, this includes things like Web3, NFTs, DAOs, metaverse, and gaming. This bundle raised a total of $771 million, accounting for over 20% of VC investment. So, on the surface, it looks like VCs are still uber bullish on last cycle's winners. However, there are two caveats to this. The first is that this isn't a fair representation of narratives, since this category has 5 narratives bundled into one. The second caveat is that out of the $771 million invested, $525 million went into just one project, Praxis, a, quote, internet-native alliance to accelerate technological progress and revitalize Western civilization. They want to build a new city somewhere, apparently. So, great for Praxis and those future Praxians, but beyond that, it seems there's not much else going on here in the grand scheme of things. Anyway, the second category with the most VC investment is DeFi, but again, this isn't a fair representation. That's because there was over $700 million invested in DeFi, but $600 million of that comes from the aforementioned Tether deal. To the report's credit, it's highlighted that if you remove the Tether deal, DeFi falls all the way back to 7th place. So then, this means that technically the leading narrative is crypto infrastructure, followed by exchanges and borrowing protocols, followed by AI. Just goes to show that following the big money doesn't always mean following the smart money. Now, if you cast your mind back to our summary of Galaxy's Q3 venture capital report, you might remember that they provided a god-awful chart that looked kind of like sand art. Well, it looks like Galaxy still feels that sand art is the way to go, because here we have even more of it. Thankfully, the report breaks down this absolute eyesore so that we at least know what we're looking at. So, the report explains that stablecoins raised the most amount of VC money in Q4 at 17%, thanks to that Tether deal. After that, crypto infrastructure startups came second, with 53 deals raising $592 million from VCs, 16% of the overall total. After infrastructure plays, it was Web3 startups that came in a close third place with $587 million, and exchanges that came fourth, raising $200 million. Now, what's intriguing is that last cycle's winners saw the most VC deals in Q4, with 92 deals in total. 37 of those were in gaming projects and 31 were in Web3, a fairly even split, which suggests that VCs are equally as excited about these niches. Crypto infrastructure projects came in second place for VC deals count with 77 deals in total, 11 more than in Q3. Next up, with 10% of VC deals, was a grouped category of trading, exchange, investing, and lending, which saw 43 VC deals in Q4. Presumably, this group mainly includes centralized exchanges. Speaking of which, if you're looking to trade crypto on an exchange, then we have great news for you. You can use the Coin Bureau deals page to sign up for the best crypto exchanges out there, and get sign-up bonuses of up to $100,000 and a deposit cashback of up to 75% along the way. These deals won't be around forever, so take advantage of them while you can by using the link below. Anyway, after exchanges come crypto companies building wallets and payment products, both of which had the largest quarterly increase in deals at 111% and 78% respectively. Although in total, there were only 35 deals between them. We reckon that this will increase dramatically as the PayFi narrative kicks off. For context, PayFi is largely under the radar despite being one of the biggest emerging narratives that could bring crypto to mass adoption. And you can learn more about PayFi by checking out the video right over here. Okay, next, the report looks at VC investment based on stage and category. It reveals that in Q4, categories that saw mostly early stage investments came from a range of niches, including the 2021 winners, so Web3, DAOs, NFTs, and metaverse projects, as well as layer 1s and layer 2s. Meanwhile, things like DeFi, Exchanges and mining saw mostly late-stage investments, since these categories are generally more mature. The report then zooms in on these categories to see exactly how these investments were distributed. When it comes to early-stage investments, a few categories stand out here. Notably, 100% of investments in payments were early stage, as was almost 100% of investments in compliance. Recall what we said about PayFi earlier. Last cycle's winners also stand out for early-stage investments, since VCs will be looking to take advantage of these narratives if they take off again this cycle. And encouragingly, media and education also saw a significant amount of early investments too. This is bullish because the single best way to drive crypto adoption is through high-quality crypto education. So, if you want to be top of your class, make sure you're subscribed. Now, when it comes to VC deals by category, this tells a similar story to VC investment by category. The report notes that in Q4 there were 171 early-stage deals and just 58 later-stage deals. When broken down into categories, you can clearly see which areas VCs are actively looking into. Assuming that early stage also includes seed rounds and pre-seeds, then almost every category had the vast majority of deals in the early stages. These would include AI, wallets, media and education, payments, and venture, all of which had 100% early stage deals. Interestingly, the standout for later stage deals is compliance, which makes perfect sense when you consider the regulatory landscape right now. As things improve on that front, VCs will want to capitalize on the companies that have the best regulatory support. This is likely the same reason why other late-stage standouts include enterprise blockchains, banking, custody, and Layer 1 projects. Essentially, these are more mature categories and are arguably the best positioned categories for when the regulatory ball starts rolling, so to speak. Now, the next part of the report looks at investment across different geographic locations. Unsurprisingly, the country that enjoyed the most VC deals in Q4 was the United States, which accounted for nearly 37% of all deals. Singapore followed in second place with a much lower 9% of VC deals, followed by the dear old UK, which had 8% of deals. Switzerland had 5% of deals, whereas here in the UAE, just 3% of VC deals took place. What's crazy is that companies based in the US saw a huge decline in the amount of VC investments. Specifically, crypto companies with headquarters based in the US had 46% of venture capital in Q4 last year, which is a whopping 17 percentage points lower than in Q3. This investment seems to have moved to Hong Kong, where 17% of venture capital went to crypto startups. Trailing behind Hong Kong is the UK with 7% of VC investments, Canada with 6%, and Singapore with 5%. The report then looks at investments by cohort. It begins by comparing the levels of VC interest in companies founded in different years, specifically between 2015 and 2024. What's surprising is that 2019 projects got the highest levels of VC capital in 2024 by a fair margin. So, logically, you'd think that it was also the 2019 projects that had the most VC deals, but 2019 actually scored pretty low on that front. It was in fact 2024 projects that had the highest number of deals. The next part of the report looks at fundraising for crypto venture funds. The report explains that the bear market, combined with 2024's rocky macro conditions, have made allocators less inclined to commit to venture investors than they were in the last bull market. The report also notes that many people were speculating that the Fed would cut interest rates from early 2024, but that didn't really materialize until much later. In any case, the report adds that, quote, "The total capital allocated to venture funds has continued to decline quarter on quarter since Q3 2023. In fact, 2024 as a whole was pretty bleak for VC interest, with the lowest levels of fundraising since 2020. As the report explains, there were just 79 new funds in 2024, collectively raising $5.1 billion. The report also adds that the amount of fundraising during the hype of 2022 was roughly 7 times higher than in 2024, despite the crypto market generally heading in a more positive direction. This has also resulted in a significantly lower average fund size, with the lowest levels seen since 2017. For perspective, that's longer than many of you will have even been in crypto at all. So then, this brings us to the big question. What does all of this mean for the crypto market? Well, Something that stood out in this report is that VCs are still incredibly focused on the big narratives from the previous bull market, especially things like crypto gaming projects, aka GameFi, and Web3 projects. Remember, though, that Galaxy's report doesn't clarify what's meant by Web3. Anyway, the reason this is exciting is simple. These narratives have yet to really take off in the current bull market. This suggests that if these narratives do see some traction, the massive amounts of VC capital behind them could act as rocket fuel for their further development. Mind you, it could also mean a whole load of VC tokens waiting to be dumped on the heads of unsuspecting retail. Another thing that stood out in the report was that US-based companies saw a reduced level of VC support. Well, now that the US has the most pro-crypto president, indeed the only pro-crypto president in history, we should probably expect to see that trend reverse in a big way. Heck, tracking sites like CoinMarketCap and CoinGecko now have entire sections dedicated to projects made in the US. And we actually have a video about US projects coming out soon, so watch this space. Anyway, the regulatory changes in the US will also have a huge impact on stablecoin regulations, which will seriously boost the adoption of stablecoins for things like payments. And remember, you can learn more about PayFi right over here. And of course, once the US begins to lead the way with crypto regulation, other countries around the world will likely follow suit. As the old saying goes, when the US sneezes, the rest of the world catches a cold. Logically then, the same thing applies when the US swallows the orange pill. What this means is that countries around the world will start to work more closely with the crypto industry, which will drive innovation and adoption on a global scale. Exciting times. What's more is that thanks to the recent developments in the US, sentiment in the crypto market has been seriously uplifted. This is when investors feel the most comfortable aping into all sorts of projects, causing prices to pump across the board. And this has the knock-on effect of creating FOMO for retail and institutional investors everywhere. And best of all, investors now have even more access to crypto thanks to the spot ETFs. Come to think of it, the ETFs could explain why VC interest seems to be much lower than in previous years. Put simply, venture capitalists may be refocusing their efforts towards the spot ETFs since they're better regulated, at least for now. So it could very well be the case that VCs never left, they're just with us in a different way. Now, if you found this video insightful, then why not show it by smashing that like button? It really helps the channel out. And if you're wondering what to watch next, why not check out our latest video right over here. Thank you all for watching, and I will see you again soon.